Okay, hello traders and welcome to this live intraday strategy webinar. Today is Thursday, June 22nd. Michael Boutros here with you this morning. Good to be here with everyone in the room. Kazaa, Mark, Pete, we just got the release of Canada retail sales data coming out stronger than expected, 0.8 versus 0.3. You are seeing some CAD strength, driving dollar CAD lower. A welcomed development. So we will be going over that setup shortly. On the menu for today, guys, to wrap up the week, we'll be going over all of the week's setups, starting with the DXY, Euro Dollar, and Dollar CAD from last night. Euro Dollar, I'm not really a big fan of. Dollar CAD, I just got taken out of my short, so we'll see if we can get another opportunity to get in that. Kiwi Dollar, Kiwi Yen, Euro Kiwi on the back of last night's RBNZ interest rate decision. Look, we didn't get anything new from the RBNZ, so the setups broadly remain the same. You did get a knee-jerk reaction higher, which has been subsequently pulled back. So we'll take a look at some of the Kiwi crosses, as well as Aussie Yen, which hit our second target last night at 83.74. Also on the menu, Dollar Yen, Sterling Yen, and Euro Yen. As we take a look through the Yen crosses, I will want to take a look at gold and crude. Sure, if Augusto's in the room today, he'll be asking for that at some point. So we'll take a look at both of those. And I will leave the rest to you guys. If you have any questions, trade setups you want to review, as always, feel free to throw them on the message board. Alan, Carlos, great to see you guys in the room. All right, so let us jump right into price action. Here's what we look like. So yesterday, dollar index. I wanted to highlight this key support region. You're basically looking at the former resistance level we were talking about, 97.51, 97.56, key region of resistance. You had former swing highs. And you also had the current median line. Remember this formation that we drew on Sunday? That exact median line converged right there. The 50 line catching both of those highs rather nicely. Remember, 97.78 was our bearish invalidation level. So as long as we stayed below that, we didn't really want to get too excited on the long side. Hey, Vlad, great to see you in the room, brother. Cheers. So we came yesterday into Asia session at support. Now, we've subsequently... by the way, here's that 97.78 level on the daily chart. Former swing highs. And what we're looking to do on the dollar index is validate the break of this median line. So if this is legit, we test it as resistance, little messy there. If this is legit, we should hold above 97.25 on a pullback. But certainly the near-term risk, while below the median line, is for another run on that 50 line. So... not really necessarily a play per se, guys. Like I said, I like using this index for reference on the dollar move, but certainly I do think the risk remains for another drop lower before we start to move again. And this is also, our bullish invalidation level remains this. A break below the low day close at 96.96 is what's needed to put the shorts back into play. Right now, as we started the week, and again, I kind of just left this on there, as we started the week, this is the range we were looking for. Okay, back on the 19th. Major key range for now is 96.96 into 96.78. That's still intact. 96.96 being the low day close for the year. 97.78 being that swing high from late last month. And again, that for me what would be needed to sort of validate the breakout, targeting that 98.28 100% extension. That would be an equal leg up off the low. Please add crude, silver, and sugar. So crude, I'll add silver. I don't even know if I have a chart on sugar, Vlad. So if we have time, I'll bring it up and we'll start from scratch. No problem. But I definitely have not looked at sugar prices. That's I'm sure Jamie's got something on that. Any questions on the dollar index? I don't want to spend too much time on this. The levels remain unchanged from earlier in the week. Again, you have to treat this still as constructive while above 97.23 near term, and resistance still that 97.78 resistance level that we ran into late last week. Okay, so we're just dribbling below this, kind of still straddling this region right here. Okay, that's dollar index, not too impressive. Number one. Number two is euro, also one I'm not really too thrilled about. Of the three that I highlighted yesterday, dollar CAD is the only thing that I'm still really operating on. Euro dollar, we just wanted to note that this thing was essentially at resistance yesterday. just as dollar index was at support. So you've seen this kind of dribble a little bit higher, but broadly hug this region. Same thing with the dollar index, right? No surprise. Dollar index being 60% comprised of the euro. Here's what it looks like on the euro dollar, minus all the extrapolated lines here. There we go. So the levels remain unchanged, okay? If you guys recall, again, earlier in the week, that 111.23, 111.29 has been our bullish invalidation level since last week, okay? That's the exact level we came into yesterday on the close of trade. We talked about this as we were opening up the U.S. trade session. It did hold, came right higher, and here's near-term resistance. Again, being checked right ahead of the open. Still holding below it. That's 111.72. 111.72 is simply a split high here. Really nice pivot in price. And it also converges right on that median line we've been following off the highs. Near-term resistance, still critical support and broader bullish invalidation at 111.28, 111.23. See that median line right there? Resistance, resistance, break, saw acceleration, testing it as support, still converges on that same key region. Major resistance and the level that would put me back on the constructive side would be a breach above 112.05. 112.05, still the same target from last week. No change, just a basic pivot in price, but right now, it's also right at the weekly open. That is the weekly open. And just higher, you have the weekly opening range highs. So a really clear level of which would invalidate the near-term downside pressure here on euro. Until we do that, guys, I do not have a play on euro from a scalp or an intraday standpoint. You're sitting mid-range right for the week. So you're not at, any major extremes. Again, gun to my head, I would probably think that this thing would move lower and then give us that last thrust higher. But largely speaking, you're testing near-term resistance right now at 111.72. Key support 111.23 into 111.28. That's also going to remain our bullish invalidation level. Any questions on euro? Again, the range since I published this last night hasn't done anything, guys. So if you're holding exposure, you're trying to get something new here, I think patience pays. The real play from last night was dollar CAD. This thing was at resistance, 133.30. Was a beautiful entry as we were writing this report, and I've been short ever since. Now, I just got taken out on this retail sales read for Canada, again, coming out stronger than expected, 0.8%, giving us that kickback that we wanted. Remember, 133.35 into 133.30. You have the 200-day moving average, okay? Former slope support, really, really big levels. Basic trendline support. Take a parallel off the low from right here. October, test, a little messy. Support, break, acceleration, resistance, 200-day moving average, and again, basic slope resistance off the high. Saw that break in it. Now we're back below it. Okay, so here's what the intraday chart looks like. As we noted yesterday, again, this was a major resistance, and I was kind of just basically saying I'm looking for exhaustion at these levels. So I did hop into a short with a stop against the high. Again, I took off half or a quarter of it. Yeah, a quarter of it. Right ahead of the release. We were up at 23 pips. I didn't want to kind of sit in the whole position heading into the retail sales print. My last limit was at 32.27, which was a basic 38.2 retracement. So kind of kicking myself here. We're out of the trade at this point. Continues to move lower. As I said in the report last night, a break of this region, and now you're looking for a tag of the median line. Okay, that's going to be determinant on time. That comes in just above 32, somewhere around 32.20 here, 32.15 in U.S. trade today. I do want to premise by saying that we do have Canada CPI on tap tomorrow. Here's the release, by the way, guys. I put the calendar in there for you. Expecting a print of 1.5 and 0.2 month on month. That's the CPI for May. Remember, these are monthly figures, not quarterly, so you're not going to emphasize them as much, but you're supposed to be seeing a downtick in CPI across the board, not necessarily a good thing. So obviously a stronger than expected print could fuel the break that we're looking for. Remember, critical support for dollar CAD still remains 31.40 into 31.60. But certainly the markets are already expecting a softer print heading into that release. And again, retail sales print today really top to the upside expectation, and we're getting that loony strength right now that we're looking for. So at this point, Mike, that's great and dandy. What do we do from here, right? Well, from here, guys, you look for near-term resistance right back at that former target where I just got out. So 3277, 3280 is sort of initial region. I'd start to look for some resistance again along that median line pivot. And I'm still looking for the stretch lower. So if we can get a pop back into here into the U.S. trade session, you get another short trigger, it might be worth another shot, but I would not go chasing down here. The knee-jerk reaction is kind of playing itself out here, and you kind of just want to wait. Get this into a deeper chart. You can see that we're in oversold territory in the 30, on the 15, and on the 5. Looks like we're making a little turn here. So we'll see what the U.S. Open looks like. But certainly the risk remains lower while below this confluence region here for dollar CAD. Now, I'm sure everyone's going to be talking about crude and you know, how could you be bearish dollar CAD with crude doing what it's doing? Look, guys, we want to always take that into account, but we don't want to necessarily limit or scratch out a trade just because of what's happening in a corollary market. I think we had a discussion about this yesterday. We want to take every trade on its own merits, right? So from that standpoint, I just want to show you a quick crude chart. I guess we'll take a quick segue here. Any questions on dollar CAD before we move on? My favorite setup of the dollar crosses so far. The only one that I'm actually still involved in. So I'm going to be looking for possible re-entry here on the loonie. That's number 3. Let's just take a quick segue. Crude, we'll do that number 4, just for the sake of keeping things sort of thematic. Here's what crude looks like. And the only thing I wanted to note here on crude, obviously we were talking about the divergence yesterday. You're still getting that, right? Made that new low. The oscillator is still holding that low. So you're getting a little bit of a waning momentum. Waning momentum. You can add that one to the book of Boutros sayings. But looking at this objectively, what I wanted to show you is the daily chart. And this is some pretty radical stuff. I don't know if you can see it at home. Let me try to make it a little bit darker. But basically, guys, this long-standing pitchfork. In fact, let me do this. Okay, I'm going to bring this to a weekly chart just to show you where we are. This is the weekly chart of crude. Okay, the main structure that we've been following and why we came into the year expecting some sort of major key high was 55 into 54.75. Big region. This was an exact 618 extension off the high, an exact 786 retracement off the 2015 highs, but most important was this median line structure here. This is off the 2015 high low, or low high rather, excuse me, towards the end of the year, and then the subsequent low of 2016. Look where the median line comes in. I guess we marked that a couple of weeks ago. We're right there now, okay? Huge region, okay? Just lower, and why I think, you know, you could get another dip or another spill lower here in crude is to satisfy this massive, important Fibonacci relationship as well, okay? You have the 50% retracement of the entire advance from the 2016 lows, and you have the 1618 extension from the decline off of this year's highs. So that would be the break target on a move lower, okay? So that's why I'm still not really getting too excited about this $35 call that you keep hearing everyone make. It's too early to tell. Right now you're at a major multi-year median line support structure. You can see that we've dipped below it. So again, on these weekly charts and these broader picture themes, you're not going to be holding it to a pip, okay, on reversal and rebounds off of support. But certainly it suggests near term, you want to be on the lookout for some sort of near-term exhaustion. Add to that, you might have seen Jamie yesterday post some tweets about, you know, extremes that we're seeing in headline news and just all these articles with, oh my God, crude's going to go down to $32. I mean, this is when you start to get concerned of the downtrend really starting to become exhaustion, right? The market does not reward the masses. Once everyone's on board and you're starting to hear it be sort of the norm that everyone's bearish crude, that's pretty much where you want to stop being or stop at least participating on the short side. So that being said, just a cautionary note, you know, we still could get that drop into 40, but largely speaking, I'm not chasing this here. So on that account, again, looking at, crude, there's that same median line again on the daily chart. I thought it'd be easier to see on the weekly. You can see that we're just probing into it now. Again, that 40 region, really big, really, really big. And if we take the slope that we were working with from that 2015 peak, you could see that that slope also converges right on that region, as well as current operative descending slope support, which is something that we've been following just from the yearly high that we made. Lower parallel converges right down there still. So you kind of have the key regions that you want to keep in mind for crude. And again, with this bounce here, that might be the relief rally that we need just to see crude, or dollar CAD rather, go for a tag of those lower levels that we're looking at. Any questions on dollar CAD or crude? Again, the near-term picture for crude looks like this. Just to put things in perspective again. So within the confines of this descending channel, there is an embedded formation, and that continues to highlight at this point resistance at 43.74, 73, which is going to be those swing lows that we made back from May. And again, a breach through that, that's where you start to look for the confirmation of the recovery near term in crude. Certainly would add fuel also to the dollar CAD downside. Questions on crude or dollar CAD? Nice little trigger there you might want to keep an eye on as well. Are you planning for re-entry in dollar CAD? Karthik, I am. It's going to depend on where we are in time. As I said, I still like it. I'm kind of kicking myself now because I think I should have at least taken that limit on just another quarter of the trade instead of the rest of it. But a winner is a winner, right? So I'm not going to really get too bent out of shape about it. For re-entry, let's see. Yeah, for re-entry, the same level I just noted. So if we get back into this region here, I want to see a reaction. I want to see a reaction. My only problem is where to put the stop. So the target for the short, Raphael, says if we get the move lower, as I said, it's going to be this confluence slope support. Remember, keep things objective as possible, guys. Here's basic trendline support. 1, 2 tags makes it speculative, but guess what? We took a parallel off the high, and it literally caught this high. So we're working with a proper slope. If you take a median line or bisect that slope, you could see clear-cut pivots, support, break, acceleration, resistance, support, break, acceleration. So that would suggest that you want to be looking for entry somewhere around 32.90, basically below 33, 32.90 region right here, 32.80 would be a nice area. I'd start to look for some resistance. My only issue, like I said, Raphael, is where to put the stop. So the ideal scenario would be a rally into here, failure, another move higher, take the stop or take the limit, take the entry against the previous high, and then see if we can get that move lower. We'll look to target this gradient here. Okay, don't get too overzealous now. We're getting late in the week. So, maybe even earlier, somewhere around 32.20, 32.30. Okay, that being said, guys, if we pop through here, specifically if we pop through 33, you're probably going to see this thing run right back into 33.30 again. So that's why I'm looking for an initial reaction here. Then I'll see if I can't get back in. If you're already holding shorts from last night's update, guys, I'd have my stop just above 32.90 and let it run. See if we can't get that run into the lower parallel. Guys, does that make sense? Raphael says, thanks. Okay, thanks. Karthik says, okay, right on. Right on, guys. So 33.30 was really the play. I don't want to get too aggressive on it from here, but certainly below 32.90, I'll see if we can't get this move lower. Karthik, you're more than welcome. Says, thank you. You're more than welcome, sir. Okay, let's jump into some of the Kiwi crosses. So yesterday we got the RBNZ coming out, yada, yada, yada. Blah, 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 right? More of the same. We didn't really get anything brand new. In fact, the statement, I think, was pretty dead on with what we got the previous one. So let's take a quick look at Kiwi dollar. Kiwi, where art thou, Kiwi? Here we go. And Dollar CAD we did. Oh, so Kiwi. Here's the daily chart. Look, I don't really have any plays on this. I just want to give you an update on where we are. I do still think my gut feeling tells me you want to be careful about trying to chase this to the upside while it's below that basic trendline resistance extending off the highs from last year. This one right here that you see in red, I don't know what to do with this, guys. This is still in consolidation. So if you're trading this on an intraday basis, here's the setup that we presented earlier. You're still looking at this triangle. Now, right now, you're checking triangle resistance. If we do see a topside break, let's say above 72.80, I'd be looking for a resumption. That's not my favorite scenario, to be quite frank. I do want to see this thing turn over. But the evidence just isn't there yet. It just isn't there. So I'm watching this closely. I do want to see Kiwi dollar move lower. Just on the premise of where we are in trend, on the premise of the veracity of the advance, on the premise of what we've been seeing in momentum. But, I just can't sit there and put a short on something this strong. And even when we were seeing the dollar sort of set back, this thing just wasn't able to make much progress to the upside. And on the other side, too, when the dollar was rallying, couldn't get much downside pressure to break below 72, which was a level that we highlighted earlier in the week as sort of the break target, right? A basic parallel off the highs. Gave us really nice touches here, and that converged on triangle support. So you're still waiting for this consolidation break. Like I said yesterday, these tend to be continuation, but I've seen them be terminal many, many times. So certainly you have to be on the lookout for the possibility of a break on either side of this. Until we do, I'm neutral. Okay, I'm neutral with a slight downside bias while within this range. So if you're trading within the confines of the triangle, I'd rather be taking short scalps. With the same respect, if we topside break, you're looking for 73. You're looking for a longer standing trendline resistance dating back to the highs he made back here, 2015, specifically in April. And that's just higher, basically in line with what the high for the year that we made so far. Near term, like I said, nothing really new here. Any questions on Kiwi? Now, the interesting thing for the Kiwi was the Kiwi crosses. This is where the fun stuff was this week. Here's what it looks like first on Kiwi Yen, which was a trade that we were looking at earlier in the week. Certainly the major level was 80.69, 80.68, the key 618 retracement of the entire 2017 range. Here's what Euro Kiwi looks like right now. Where are you, Euro Kiwi? Okay. Whoops. That's Kiwi Yen. Where is Euro Kiwi? Am I in the wrong update? There's Euro Kiwi. Sorry about that. So we'll come back to Kiwi Yen in a moment. Euro Kiwi was one of my favorite ones. Still is. We've made a round trip. It was at support. You got the rebound, but guess what? It collapsed right back into support and overnight trade. We first initiated this trade, or first highlighted this setup on the 19th. And I just wanted to highlight the daily chart of where we are and where we were. We were highlighting this key region of support. You had the 100-day moving average, slope support, 50% retracement, all converging on this key region. Highlighted 5380s into 5370s, sort of our near-term bullish invalidation for the broader trend, major key support. Here's what it looked like on the intraday charts. Even within the confines of the near-term picture, you had this embedded channel taking you into the lower parallel. That's even more conviction. You look for the channel break to give you, the reversal recovery play. Here's the 120-minute look like as we started the week. We dipped right into that region. The weekly opening range held. We dipped into that region again. And as we were coming into yesterday, we were saying, look, we're looking for a basic opening range break. I favor the long side. We did get a top pop. Here's what it looked like last night. Clear opening range right above support. Did get a top side pop, but guess what? Came right back. So here's the break. Initial target was 54.85. We just missed that. 54.75 I think was the high. And here we are right back into key support, 53.70 to 53.85. So The weekly, the long and short of it, guys, let me snap that line for you. The long and short of it, guys, is that the weekly opening range is still intact. This is a weekly opening range failed break of the weekly opening range high, which means that the weekly opening range is still intact above key support. Bottom line, exclamation point. You know, what can I say? If the setup remains the same, I have no change. I still favor the topside move. Kiwi has been really not responding and not really agreeing with us, so I'm not going to fight at this point, but just keep in mind that this range break should be pretty telling, and certainly you're right at bullish invalidation, guys. If this thing drops to the downside, there's nothing until the 200-day moving average. Estimated comes in at 52.50, okay? That's like 130 pips, 120 pips to the downside. And then you have another 618 key retracement of the entire 2017 range that takes into 51.85. That also coincides very nice with the April low day close. So the levels are exceptionally clean. You know, look for a break of the weekly opening range heading into the latter part of the week. Looks like it's going to be one of those Thursday breaks. So you look for an extreme on Friday. Questions on Euro key. And again, you're continuing to get some of that building ongoing divergence. So be weary. I would not go chasing it on the short side unless you get a definitive break. With the same respect, if we do get signs of exhaustion and a long trigger against the lows, I'd be willing to take a stab at it. Questions on Euro key. It's number 6 for this session. Moving right along, Kiwi Yen looks like this. Also a trade we've been following very closely. That was coming off resistance. And the major, or the focus here that we highlighted earlier in the week was this region. Key 618 retracement of the decline off the highs. And certainly you can see that we failed to close above that. We're trying to test that again, but on the near-term picture, here's what the slope looks like. And here's what we looked like earlier in the week. Okay, you can see that that parallel of the same slope we were following literally caught the highs to the pip, the pullback, former slope resistance, offering support. We highlighted that earlier in the week. You saw a little bit of rebound there. That rally made this slope, and if I took a parallel off that, you can see 2 reference points touching perfect here. So I'm starting to think, look for some near-term resistance up here still. Today's close will be paramount. As long as we hold below 80.68, the risk does remain for that move towards the 80 handle. A break of yesterday's high would pretty much put this back on resumption, in my humble opinion, especially because of the way that we made that high overnight on that RBNZ. So if we breach through this, you know, you look for the upper parallel, 81.30, you look for 81.50, which is also a decent pivot in price that we've been following. Those just be initial soft targets to the upside on a breach. Largely speaking, looking for some exhaustion, looking for a dump back towards 80.25 in the 80 handle first. Any questions on Kiwi Yen? Very clean setup. A little bit of a chop fest here because of the RBNZ, but sure, that'll clear up. That is number 7. Of the yen crosses, which we're going to jump into now, Aussie yen, dollar yen, sterling yen, euro yen, Aussie yen was my favorite. And here's what Aussie yen looks like. It finally hit target number 2, highlighted from earlier this week. Here's what Aussie yen looked like earlier in the week. So on 619, we were talking about this region, major region of resistance. Interim support 84.25. Where's Aussie yen? Okay, and then 83.74, and that's what we hit in overnight trade. So here's what Aussie yen looks like now. This was a big region. Okay, we sailed through it and came right back below it to close the session. Remember, I went over this yesterday, so I don't want to waste too much time here today. 84.83 into 80. It is 84.83, exact convergence of the 100% extension from the ascent off the lows and the 50% retracement from the decline off the highs, okay? You saw a failed response there. Initial support at the weekly opening range lows, a really nice pivot in price. Again, 84.41. You saw that downside break. We talked about this median line or this basic trend line that we added yesterday here in the webinar. We actually touched this right here in the webinar, if I'm not mistaken, and then we rallied higher. There's the break. Final target just got hit there at 83.74, an overnight trade. So where do we go from here, Mike? That's all good and dandy, right? Look, what I wanted to highlight is this. I still think there's more downside to go, but what I want to say is this. You're getting divergence in momentum on the near term. The 2-hour chart is showing a lower low in price. Oscillator is showing a steady hold. Okay. And the other thing I wanted to highlight was the longer term median line that you see here in purple. It's probably best off seen on the daily chart. And that's right here. Again, I showed you this yesterday too. This slope using the high, low, high for last year, barring that big old outside day reversal that we saw on Brexit, okay, taking the same slope of that gradient, caught the exact lows for the year last year, touch here, sailed through it a little bit here, but resistance, break saw acceleration, and here we are as support. And that's what this is here on the intraday chart. That's what this purple line is. So my point being is I think you could get a little bit of a larger bounce off that region on account of that multi-year slope. You don't want to be too finicky about it because, again, these longer-term yearly slopes, you can see throwovers, you can see something like this. So I'm a little hesitant to actually take anything on the long side for sure, but I do think you could get a rally. Stay bearish, sub 84.40 near term, downside break. You're basically looking for a run on the median line. All right. In fact, I just want to see if this is the 50 level. Is that the 50? Resistance, kind of messy. Yeah, I don't want to really stress it per se because the touch points haven't been all that clean. So I'm not going to leave that on there, but you get the picture. You're at risk for a little bit of a recovery from this region. Sub 84.40, I still think you look lower. Looking to tag that lower parallel. Questions on Aussie yen. Let's just see what this looks like. Okay, perfect 38.2 that we're testing right now as well. '83 handle comes in at the 618. So some possible downside targets here on a break lower if we do compromise that region. I'm short 84.70, says Karthik, for Aussie yen. Well done. 84.70 was the level, my man. 84.83 was the invalidation. So we popped through that and came back. You took the entry right after the comeback, stop against the highs, I'm assuming, was how you played this, Karthik. Really well done, sir. So I would, again, my personal, not necessarily trading advice from SB, but my personal opinion, I'd be looking to take a little thing off here at 83.80 if you're holding multiple lots, and you'd bring your stop down to break even at that point or better, maybe even against this stop high to lock in some profits. If we do get above that high, and specifically 84.40, like I said, you could see a resumption. So that's sort of where I want to stay bearish below. And as far as a downside break, look for 83.43 and 83 handle, basically 83.04 here as possible downside targets where you might want to be looking to wrap a little bit more of that trade up. The only thing I don't really, or the only thing I wish I had on this was some slope to the downside. You know, typically if we have a little bit more of a registered low, high, low, I could work with some sort of descending slope. This is too close. This is too close for comfort. There's really nothing here structure-wise that I would really stress. Looks like we break the lower parallel holding as resistance. So yeah, objectively you'd still want to look lower. But when you work with slope of such near-term magnitude like that, I'm just very hesitant sometimes to take it or spend too much, put too much conviction on it. Let's just say that. So if we were to get another rebound and it holds here, you might actually have some slope to work with to give you some guidance on where we should be looking for targets in time. And that's the one thing that we always want to keep in mind, guys. You know, the lateral levels that we're targeting on these intraday trades are very critical, right? Whether it's a Fibonacci, whether it's a pivot, whether it's a key, just price action pivot that we've seen, or whether it's a moving average. But what I want to say is the slope, one of the biggest benefits that it gives us is it helps us to identify where in time we should be looking for those targets. So certainly on the descent here, that's one thing that's lacking is I don't have a descending slope, which is what I want to see. But certainly the lateral levels have continued to work pretty well. Bearish sub 84.41, downside targets 83.40 and 83.04 handle. Make sense? Questions on Aussie yen? He says, yep, thanks. All right, Karthik, you're more than welcome, sir. Moving right along, we are making good time. That is Aussie yen hitting second target at 83.74. We cited the downside targets beyond here. Bearish invalidation dropped to 84.41. Dollar yen is up next. Here's what the yen ski looks like. So my cautionary remark earlier in the week to not chase the long side, I guess was the right call. I haven't taken anything on the short side of dollar yen. You know, I've been playing, like I said, the yen crosses just because of my distaste, really, for the dollar at this point. And ever since FOMC and last week, it hasn't really been all the clearest of trades. So here's dollar yen, what we looked like earlier in the week. I believe it was on the 19th. Yes, dollar yen, dollar yen, dollar yen. So I'd be mindful of playing any new positions on the long side here. I was really already calling, just showing concern for the long side. We probed into that median line parallel. We talked about that. It failed. It's come back. Hasn't hit 110.75 yet, so we're nowhere near that target. We're still above 111, but the levels remain unchanged. Sandy, I have not. So let me add that to the list. Pound Oz. I haven't looked at that for a couple of days, actually, so remind me if I don't get a chance, but I've jotted it down here. Good to see you in the room, Sandy. There it is. It's right here. Okay, so that's where we capped out. That was right here, the pullback. We've tagged the median line in time. It was down at 10.75. Now that we've moved forward, the median line came in right around 111. That's basically what we've hit. There's the 110.75 now comes on the 50 line. That's the next downside target. In time, it doesn't really come into play, till tomorrow. So you're sitting right slap in the middle of the weekly range. What do? You're sitting on your hands, guys. The only trade was the short that we had noted there. Other than that, it's dollar yen. Momentum's sitting right at 50. You don't do anything with that. And another trade that kind of just lost its steam. And that's completely okay, guys. You're going to get these trades that fizzle out. There's plenty of opportunity elsewhere, and that's what we're here for, to point you in the right direction. But as it stands right now for dollar yen, I just don't have any play, guys. Just wanted to give you an update. We're right in the middle of the weekly range. Put a gun to my head. I'd still stay bearish sub 111.60 for now. Look for that drag into 110.75. And a basis, is the slope. Support, 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 resistance, resistance, break of resistance, check of support would be sort of your initial play. So yeah, I think you still could get another drag into that downside target, 110.75, 200-day moving average at 110.50. And that's where it would be a little bit more of a critical support bounce. It's also the weekly opening range lows. All right, clear as day. Questions on dollar yen? A little bit more of a neutral stance as we stand right here, but we'll continue to track that heading into next week. Pound yen and euro yen. Here's the interesting stuff now. So pound yen looks like this. It's been a while since we visited it. I just wanted to highlight the new slope that I'm working with on pound yen. I believe we covered this on the 18th, which was on Sunday. Yes. So here's what we're looking at with pound yen. The daily chart's pretty darn clean on where we are, okay? Yes, I don't blame you. Sandy's saying I shorted it dollar yen on Tuesday, got tired of a very slow move and got out with 25 pips. I don't blame you. That thing is, it's the abomination, man. It's what it does. You know, this is my frustration. Even for a short-term guy like me, that's a slow grinder, right? This is a 2-hour chart. So yeah, I don't blame you. Tuesday was the entry. If any time there was the entry, that was great. But yeah, it's kind of losing steam here. I don't blame you. But pound yen looks pretty clean, okay? The only thing with pound yen, or the thing that we were looking at with pound yen was this. Just wanted to highlight this from what we were looking at from last week. Basic trendline support off the lows. Tagged again here this year. This is 2016. This is the 2017 low. Here's the monthly low. And look where this is. Now, I'm going to zoom this out, and it's going to be a little messy, but I just want to show you very faint slope line that you see here in gray. Okay, this is the daily chart. Here's the high from 1998, the low from 2000, the subsequent high that we made in 2007. Really long-term slope. Median line, resistance, 50 line, support, median line break, acceleration. 50 line break, acceleration, check it as support, rebound. 50 line break, acceleration. We've been huddling that 50 line. I know it's really hard to see now, but basically that 50 line still comes in line right over here. Right over here. So for me, I am looking for some sort of definitive price action off of this region. You have that 50 line that's in gray. You have the 200-day moving average, and as we noted, the 764, which caught the exact low. This 764 takes into account the entire 2016 range. So for pound yen, nothing's changed. I'm still looking for big support here. A break above the June open is what we need to validate resumption of the broader uptrend, but right now, focus is still against that key region. Here's what it looks like on the intraday. Pound yen for me is at support. Wondering your levels are. I shorted on Tuesday, Sandy says. So Sandy, I hope I answered your question. I didn't see that before, but that's what I'm looking at right now. You know, from a broader standpoint, this is pretty big for me. Intraday, you know, you could still see another spill back into 140.15. That's what I'm looking at right now. That's a basic 618 retracement of the advance off the lows. You have this median line. This is a modified pitchfork, guys, which basically takes into account slope. So this is a modified shift port, which is basically taking into account this basic trend line. And it angles the pitchfork as such. You can see that the upper parallel break saw acceleration, offered support. And guess what? On the rally, that red line is the exact gradient, same slope, extended off the lows that you made back here in June. Boom, boom, boom. All right, so keeps the focus higher here above 140.15 near term. Topside break, you're looking for 141.48. More importantly, 142.27, huge region of resistance. Okay, same level that we pivoted off of. Each break saw acceleration or a major reversal. That comes up at 38.2 towards the latter part of the week here, heading into tomorrow's, this is the 120, yeah, heading into the overnight trade session. Any questions on pound yen? Pound yen at MS1. That's a monthly standard pivot, I assume you're saying, cluster with the weekly pivot. Right now, Sandy, is that where we're at? What level is that you have? Because like I said, I wouldn't be surprised if this thing drops back into 140.15 first. But I do like it. I do like it higher. I do like it at 42.72 or a 42.27 tag yet again. I'm dicey at euro yen, holding the short side. Says entry at 123. Okay, so Karthik, I'll look at euro yen again. Did we cover euro yen? No, that's next. That's next. 140.15 says Sandy. 140.15. Oh, beautiful. Right on, Sandy. She's talking about the same level. Okay, awesome. Awesome. I love when you tell me that you're looking at I used to be huge on pivots. For those of you who don't know, Sandy has been with me for a couple of years, but pivots are a great objective way of calling some key levels in price. So I tend to keep them off my charts just because I want to keep them a little bit cleaner. My analysis tends to be a little bit more in depth, but certainly when these clusters of monthly weekly pivots converge on Fibonacci levels, trend line levels, major moving averages, these add further conviction, further evidence to your analysis and certainly to your trade setup. So keep that in mind. Loving it. 140.15, Sandy, sounds pretty damn good as our bullish invalidation. 142.27 really being needed to mark the bigger breakout. And again, such a scenario, you're looking at 143.40 as a decent target to the upside. Major swing pivot low and the key 50%, not the key, but the 50% buy sector of the entire decline. All right, pound yen. Questions on pound yen? Again, keep your eyes on the Brexit talks. We'll continue to make some headlines, but largely speaking, we'll continue to follow the price action. So Aussie yen was 7, dollar yen was 8, pound yen was 9, euro yen 10. Here's what euro yen looks like, Karthik. He says he's dicey on it. You're holding a short from 123.90. Here's what I'm looking at. Look, for euro yen, what I don't like is the daily chart's getting messy. And you guys always know, I always tell you straight up, when the daily chart's starting to get really foggy and there's lack of clarity, there's lack of markets really respecting our levels, I tend to shy away. Now, why we got so interested in euro yen, whoops, dropping my pen here, why we got so interested in euro yen earlier in the month, earlier in the week, or just a few, I guess, last week, when we first started trading this, is this outside day reversal, massive key outside day reversal off of the lows for that swing low that we made last month on the 18th, right? Huge support barrier at the 2017 Open, 123.17, and the 236 retracement. So that was our key support. And if you remember, we documented the decline into this, and that's where we were looking for a hold. We got faked out on that break and close that we made on the 14th. The 15th posted a massive outside day reversal, taking us right back above that key barrier of support. So as we came into this week, we noted, look, the monthly open is right here at 24.50. You have convergence with basic trendline resistance. That's the focus to start the week. If we pop through that, look for resumption. Near term, the risk is for a pullback off that, but we want to look to fade that higher. Well, I think we are on the right game plan, to be honest with you, Karthik. But from here, what price action's been doing hasn't been all that inspiring. Here's the weekly open. We're essentially, we're a little bit lower, but we're virtually unchanged. We came into that resistance, 618 retracement that we highlighted, 124.50, probed through it, didn't do anything. The pullback found support at the 50 line, and the only thing that I really have confidence on, or that I like, is the slope, right? We haven't really been doing much on the actual median line, but certainly the 50 line's been catching support. The upper 50 line of the quadrant's been catching resistance. So, focus on that range between those 50 lines. The weekly opening range really hasn't given out either. So he says, I'm getting tired of all the sideways sale, LOL. Karthik, yeah, and that happens, man. And that happens, right? You're not always going to have the play just following our directional bias. You're going to get this chop sideways action, and it's a yen cross, so I'm not surprised anything the yen ever does. I took profit there. I'm done with this pair for this week. Sandy, yeah, like we said earlier, it's the same as the dollar yen, right? Kind of just lose steam. Really, really frustrating. So look, Karthik, as far as your trade, you're short 123.90. This is all I would say on that. You posted an outside candle reversal here on the 2-hour chart. Yeah, you could get another move lower, but to be quite honest with you, I'm not really a fan of the position. You're coming off the 50 line here with some fervor, and momentum has continued to hold above, has continued to straddle basically this 50 level. So you don't really have clear-cut momentum in either direction, but you're short from the lower end of the current range, which is what I get concerned about. I always try to keep things as objective as possible, Karthik. So even if I'm trading an intraday position within a given range, you're going to probably want to take that short from the upper part of that range. You're probably going to want to play the rebound off the lower part of the range. And as we continue to highlight this confluence, you're short from just above that confluence support. So I wouldn't want to get too aggressive on it. I don't want to shake you out necessarily the position, but certainly if we break that high, 24.35, after an outside reversal like that, I'd be expecting a move into 24.50. And I don't know if you're willing to take a 50 pip loss on that, or you're willing to sit that in, but that would be still where we're looking for a resistance near term here on euro yen. Does that make sense, Karthik? So good luck on that one, but that's kind of where I would just put some color on it. And again, you're going to find yourself sometimes, guys, having to take or having found yourself jumping into a position chasing. It happens to the best of us, even guys who have been doing this for years and years and years. The most important thing is when you jump into the position, take a step back. Why am I taking this position? What's my stop? What's my limit? And try to be as objective as you can. Because a lot of times when the market starts to run, that's where you get the best of you. It gets the best of you and you kind of just jump into the position because you want to be in it. And I completely get that feeling. But FOMO and trading, fear of missing out, is the riskiest type of behavior. So one other thing I want to highlight is 100% extension. If this is correctionary, 123.46 would be with the 50. So you have levels on both sides here. The focus, though, is on a break of this range, 123.80 into 124.50. This is still the focus, immediate range heading into the U.S. trade session. He says, got the point. Yes. Got you, Karthik. Cheers, mate. All right. So that is euro yen. Let's take a quick segue here into some of your questions, guys, as we run into the latter part of the session. Gold prices going to be making headlines today. Everyone's been talking about the gold sell-off and gold's going straight shot to hell. Well, not just yet, my friends. We are at support. We're seeing a nice little rebound off support here. That level we highlighted earlier in the week. Everyone here in the room heard me talk about 1241 into 1245, big region. 100% extension from the decline off of the highs. Beautiful level. Also had a very nice pivot in price right here, which is coinciding with the swing lows that you made back in October of last year. Nice pivot in price. Nice pivot in price. Break acceleration. Break acceleration is the exact low this week. Really nice levels on gold here, guys. And if we take a look at the intraday chart, here's what the 240-minute looks like. This is the slope that we presented a few weeks ago. You could see that the lower parallels, or the parallels in general, been acting pretty nice, okay? And here's the slight little rebound. So at this point, whoops, didn't mean to do that. At this point, let me clean this up a little bit. Done. Take a basic retracement off the highs. $236 being tested right now. Doesn't get much cleaner than that. Okay. I'm going to go ahead and scratch that extension at this point. I'm going to highlight this low because it seems we've gotten some play off that support, support, support. 4 touches, 5 touches break with the acceleration really adds value to kind of keeping that in focus. Let me keep my color skew here the same. And see where my cursor is to the left? 38.2 has been offering a nice support structure there. That's 1260 into 1261 is what I'll highlight as sort of key resistance near term for gold prices. There you go. Questions on gold? Big support bounce. Looking a little bit higher before we start to turn over. As far as where we would look for resistance, nice reversal off that 50 line here. So as you're looking deeper in near-term price action, as you get deeper and deeper, you want to study how the price action has been responding to the slope we've been following. And I still do like it. Look at that outside reversal candle right off of the 50 line. Still puts the emphasis on 1253. 1253 breaks, 1260, 1261 would be the next stop side target. I do like that. I do like that. Way too steep. but might have some merits. 2-point touch, so it's just speculative, but if you take the parallel, looks like we got 2 on top too. Keep an eye on that. Keep an eye on that. Okay. Any questions on gold? Crude silver is next. I do want to take Sandy's pound Aussie because that was a trade that we were following as well. So let me just take a quick segue to silver. I don't know if I have anything new on that. I haven't updated this week yet, so let's just take a look at where we are. Okay. Not my favorite setup, but what I would say is this. You're still wary. Be wary of any short side exposure above 1632, 1629. It's such a huge region. Such a huge region. Major swing pivot highs. The 786 retracement from the advance off last year's low that we made in December. You also have resistance right now, right at this pivot line. This is the 618, if I'm not mistaken. Yep, of the descending median line formation. So I don't really have a very good play on this. I would say you're at risk for a little bit more of a near-term recovery just on what's going on, but today's high, touching that median line and holding, I put this on a neutral stance. It's slightly bullish near term. Broadly speaking, you still want to sell a rally. So I don't have too much conviction on crude. We'll come back and revisit this next week. Hopefully we'll get a little bit more clarity on near-term price, but certainly price action does not look all that inspiring to me on silver. We did crude already. We did gold and sterling Oz for Sandy. So I'm not sure who asked about this. I think it was Pete. Was it Pete or Vlad for silver? So Vlad, that's what I'm looking at with silver right now. Again, keep this sort of pattern in view. You know, with major key support still at 1623, 1632. Looking at sterling Oz real quick. I'm actually really interested to see what this looks like. Ooh. Interesting. So Sandy, what are you thinking? False break here and a recovery? Or are you thinking we hold? Because that's the only focus I would have on this right now. Very, very similar to what we were looking at with, what was it, Euro Yen coming into a major pocket of support. Same deal here. We highlighted this region a while ago. You had the 200-day moving average, 100-day moving average, slope support, 50% retracement, 618 extension. You name it, right? It's all stacked up right here. You came right into it. You dribbled and closed below. Here's the pullback. Checking former slope support as resistance. You've got to wait for a break of this range. You've got to wait for a break of this range. That's really the only focus. Sterling Oz and oil. I'm looking for another short. Not sure if it's wise as it's already Thursday. I completely agree with you on that. I do agree with you. I know why you're looking for the short, Sandy. We're looking at the same thing because we came right into resistance and we're whipping back. But I agree with you, yeah. I don't know if I want to chase it here. Again, divergence on the daily chart into that key support really puts the emphasis on a hold right here. This needs to hold if this is going to be bearish. And I'd want to get back below the 200-day moving average, basically 67.18, the bottom part of this range we were highlighting earlier in the week. I want to get out the bottom end of that, and that would confirm break of support, check as resistance, reversal lower, and such a scenario you'd start to look for resumption. But as it stands right now, if we pop through this, I think you risk a pretty decent recovery. With what Aussie's doing, generally speaking. Here's Aussie dollar real quick before we leave. You know, if that break is legit, weakness in the Aussie could give us that fuel for the top side on pound Oz. So Sandy says she's long off the 200-day. Sandy, you're knocking it out of the park. Well done. Well done. 168 is clustered with monthly S1 and weekly pivot and around the weekly open. What is that at 68? Yeah, it's pretty big, right? Adding further emphasis, Sandy, on a breach above that region really being a change of behavior, right? A big deal for pound Oz. So Guys, with that, we're going to wrap up the session here today and for the week. I want to thank everyone who was able to attend. Again, I'll have this archived and up as soon as I can, shortly after the completion of the webinar. And remember, again, we'll be back on board on the free session on Daily FX on Monday at 8:30 Eastern, and Tuesday, Wednesday, and Thursday right back here on SB. Guys, great to see you. Have a great weekend. Best of luck trading, and I'll see you next week. Cheers.